I'm not going to use a microphone. I hope you can hear me. So good morning, DSC 2013. It's great to be here. I want to thank my colleague at Cornell, Murillo Campello, for inviting me. This is the third time I'm serving as a panelist. And so I tell my fellow panelists that if you keep on trying, you might get good at this. Obviously, I am still working on it. So I'm pleased to give it one more try today. I am shocked and surprised that none of my fellow panelists, I should start by saying congratulations to you. It's a very competitive program. You guys should feel great. But I'm shocked and dismayed that neither our current program chair nor our current president nor any of our panelists have mentioned what I think is probably the single greatest reason you should feel good about being here today. And it's not about the fiscal cliff that we're about to fall over. This week, ladies and gentlemen, finance was awarded the Nobel Prize in Economics by recognizing Gene Fama, Lars Hansen, and Bob Schiller. And I got to tell you that this doesn't happen all the time. In my career now, which spans 20 some odd years, this is the third crack that we've had at it. And it was Markowitz, Sharp, and Miller in 1990. And then of course, Merton and Scholes in 1996. Now notice there was a 6-year gap between those two. And then now do a little arithmetic and you'll see that there was now a 14-year gap. I don't know what that means, the duration of those gaps. But you guys, I don't know, you tell your brothers and sisters and mothers and fathers and cousins about why you're doing a PhD in finance and going into this profession. This week is an awfully good time to tell them. As always, I love listening to my fellow panelists. I haven't heard Mike yet. I'm waiting for Mike. So why did they get in this business? Viral? Well, he's a crisis chaser. He was born on the LTCM crisis, and my gosh, his career's taken off since 2008. Everybody wants to hear Viral. Viral's our classic crisis chaser. Martijn apparently is a scandal watcher, and he wants to understand. Who these institutions are that are tracking whether they're doing this. Itai is all about when systems break down. That's what he is passionate about. He just wants to where the cracks in the financial system are and where they happen. And Ravi, for bless him, he's 30 years he's been trying to figure out this thing called risk, how you measure and model risk, and what the price of that is. He took us through this literature. I love it. So I'm waiting for Mike. So what am I going to talk about?
Andrew, Ravi just reminded me that Vickery won a Nobel Prize also, and he published his
Vickery? Of course. Yeah, I mean, you can. We'll get into this. Sure, Modigliani has a little touch to finance too, but I didn't count him. So we can discuss and debate that. I think of it as 3 installments. All right, so who am I and what am I doing? Well, my research, I started down the road here, doing a lot of different things, and then evolved into the field of international finance, and that's what I want to talk to you about today. What's my strategy? I'm not a crisis chaser. I'm not a scandal watcher. I'm so easy to figure out. It's crazy. I just follow the money, from where to where, regardless of boundaries. That's all I do. I have a research stream on asset pricing. I have a research stream on corporate finance, and I'm just following the money. That's what I find fascinating. From where to where. And why am I doing this? I don't have aspirations to create a greater good. Maybe I should. I just find this incredibly fun. So I don't know what you guys are thinking, but for me, research in finance is unconditionally fun. The relationships that you build, the data that you get to work with, just whatever you do, it's just fun. It's fun to be here. It's fun to be around these people. It's fun to listen to these people. It's fun. So I'm going to ask a question, and then I'm going to talk through these little slides here. You can see it's a little bit of an unusual title I gave it. Why should you do research on international finance? And then perhaps why you should not. Usually we're selling what we do, right? That's the greatest thing. I'm going to be giving you a cautionary tale with a warning at the end why you might not want to do research in international finance. So first of all, I'd like to ask the question, panelists included, let's do a survey here. How many of you are born and raised outside the United States? Please put up your hand. Oh, goodness. Let's put our hands down and let's ask, what fraction of you were born and raised in the United States? It's about 8, 9, 12 people. Okay. Secondly, how many of you are studying at universities, doing your PhD right now, outside of the United States, not at a US university? So that's interesting. Last question. What fraction of you, and you can think about any of your working papers in second year or third year, or any of your papers that are constituting your dissertation as you emerge out of this PhD, what fraction of you, put up your hand, and you guys can talk about your hundreds of papers, if you want to put up your hand. What fraction of you have a touch to data that is not US data? What fraction? So, what do we say then? A third? Maybe a fourth? Maybe a third. 40%, let's say. So, let me tell you about international finance. And I want you to remember those statistics that we just talked about amongst yourselves. So the presentation is broken into 2 parts. Why should you do research in international finance? And the second part is maybe why you should not do research in international finance. So, I love this. This is one of my professors back in my graduate school day. He wrote this book called The International Money Game. International financial markets, the study of international financial markets, according to Bob Alibert, is a game. It's a game. International finance is a game with 2 sets of players, which is the politicians and bureaucrats and national governments, and the treasurers, and I guess you can throw in investors here, of giant, large, medium, and small firms around the world. And what we've got is these policymakers, these national policymakers, with these objectives of managing their economy, growth, employment, inflation, and international commitments. And the rules that they define around those objectives, which call those regulations, and the differences in those regulations defined by their respective objectives, and the interaction they have with investors and corporate financial managers. That's really what international finance is, according to Albert. I think it's pretty good. And oftentimes the game, as it were, is the opportunistic corporate financial managers and or investors seeking out idiosyncrasies in these differences in regulations as opportunities towards profit making for some greater good, some objective function that they have respectively. Now, what are interesting? Now, he wrote that book in '87. That's now coming up on 30 years. What's interesting aspects of today's game that should make you interested in doing research on international financial markets? Well, for one thing, this is a big theme of today, the dominance of US capital markets, which were once the preeminent place of study and trade, and it still is, but it is clearly waning in importance. We are seeing that. Martin gave a beautiful trend about the dominance of institutional investors in the markets, and that it is a global phenomenon. This is a global phenomenon. There are always new financial contracts, instruments, participants, players, opportunities, locations, physical locations, virtual locations within which to do your business, from the perspective of sovereign credit, sovereign CDSs, to the existence of sovereign wealth funds, to new trading locations in countries that you wouldn't have even imagined as a place in which to take your business. And fascinating competition among a very interesting mix of those national and I guess you would say transnational policymakers from the Securities and Exchange Commission and the Fed to the Bank for International Settlement, the People's Bank of China, the Chinese Securities and Regulatory Commission, the European Central Bank, blah, blah, blah. It's intense as ever it has been. It is as intense now as it ever has been and is ongoing. And of course, crises are continuously reappearing. So these are all great reasons to be doing study on global markets. You guys all want to know, at least from when I talk to you during the breaks or the morning, what's hot? What should I be working on? Well, you should work on whatever you want to work on. But what's hot in research on international financial markets? And this is always a risk to do this. The natural thing is to talk about your own papers. I won't. I'll talk about some other stuff that I think, what I'm watching, I think is really cool stuff. And I admire the scholars that are behind it. So one thing we know is institutions still rule. And this comes from this now 15-year literature on law and finance that is laid at the cornerstone of the work by Laporta, Lopez de Solana, Schleifer-Vishny. But clearly we're still very heavily influenced by this. Maybe many of your papers are influenced by this literature. Market volatility, risk, the magnitude of it, the growing, emerging, the new normal, I call it, again and again. And behavioral biases now, what's cool about behavioral finance is it's now transcending boundaries. The interest in it is clearly transcending boundaries. So here at risk of overplaying some cards and underplaying others, I'll take the risk. Here are 3 papers that I think are fantastic examples of the kinds of things that we're seeing. This is a paper that was published in the Journal of Financial Economics called Lost in Translation. Hearn, Daminelli, and Fracassi. They look at cross-border mergers around the world. And you're tempted to link that to institutions, the quality of institutions. These guys take it one layer further. What they did is they collected data on behavioral attributes of individuals, their propensity as a people towards egalitarianism, propensity towards other sort of socializing, individualism, elements of trust. And what they find is that the nature of cross-border merger and acquisition flows is closely and intensely linked to the closeness in terms of cultural values. Perhaps you're not shocked by that or surprised by that. But these are another example of the kinds of institutions, maybe informal institutions, that sort of are deeply rooted, that I think are fascinating things to study. I don't work in this area necessarily, in behavioral, certainly cross-border, but this is a fascinating piece of research, and it's a well worth your read. Currency markets and the currency risk is sort of like died. Currency markets are at least as important as they ever have been, but for a long while, international finance research was spinning its wheels on trying to figure out how currency risk, to measure it, and to uncover its importance for underlying prices. Thank you for nodding your head, Robbie. So there's this great new push by these scholars, Hanna Lustig, Nikolai Rosanov, and Adrian Bertola. They have a whole series of papers. This one just was published in the RFS. And what they've uncovered is some fascinating elements of study of the sort of the panel of currency returns across countries and over time, and have uncovered a kind of a 2-factor model, the Fama-French 3-factor model. Well, these guys have developed a kind of a value factor, they call it a slope factor in currency returns, over and above a common market-wide global market factor called currencies on average. And it seems that this little 2-factor model has some nice legs in terms of explaining the cross-section of currency returns over the last little while. I want to encourage these guys to keep going. I think this is great research and would encourage anybody. For a long time, what I like about it is that for a long time we were spinning our wheels in this whole currency domain. And now we've got some new legs and pushing forward with the help of these really smart crew of young people. And I'm sure many of you in this room know this, bubbles across borders. So this is a fantastic paper. It's a clinical study of the Chinese markets in the mid-2000s, where they were looking at these unusual warrants that were issued by 58 corporations. This is published in the AER a couple of years ago. And it was related to a share reform. Remember, national policymakers, right? Greatly influencing all this stuff. There was a share reform that allowed for a large number of shares to be newly issued. And I guess a lot of the principals in these firms were frightened. And so the CSRC, the Chinese Securities and Regulatory Commission, allowed for these firms to issue these new warrants. And what's really interesting about these warrants is that they, you can understand, obviously, the underlying securities. They're very transparent. The underlying shares of the stocks were trading and readily observable. But what was fascinating about this from a behavioral standpoint is these were massively out of the money, but the trading volume was like astronomical. And it just belied all logic. And what these guys did is they took this experimental setting, a unique experimental setting around a unique regulatory event, in a very clinical way, delve into it, and were able to shed some light on some basic economic theories about what we believe in terms of heterogeneous agent models and the rationalization of bubbles and the existence of bubbles. So I think this is a fantastic paper. I mention it whenever I can in a public forum, and there you go. So these are the kinds of things I think are really hot and cool. Now, how much time do I have? Still have a few minutes. So why should you not? In spite of what I just told you about all the exciting topics and interesting things, why should you maybe not, you young scholars emerging into our profession, not do research on international finance? So you guys heard of the home bias phenomenon. No international finance course or research course and PhD programs fail to talk about it. This is this phenomenon that we know exists, whereby portfolio investors typically have a disproportionate holding of their home market securities, notwithstanding the fact that their market might represent 1% sliver of the world market portfolio. In spite of the rationality of diversifying globally, they disproportionately hold shares in their home market stocks. And there are theories that talk about measuring fundamentals of risks and returns, sure. But they talk about other kinds of frictions that can possibly explain this, from agency problems to transactions costs and taxes, and even behavioral stories have been proposed for this. Well, ladies and gentlemen, I wrote a paper last fall, and it's called Home Bias, an Academic Puzzle, taking inspiration from this long and expansive literature on the home bias phenomenon in international, to try to understand what we do. And I'm talking about research in finance. And I'll show you what I did. I collected data with an army of research assistants on the history of publishing in the finance field over the last 20 years to try to understand just what fraction of papers actually look at non-US topics and see if we can understand it, whether it's high or low or unusual in any way. Well, ladies and gentlemen, so is there an academic home bias towards the fact that 90% of this audience comes from non-US places, and the US now represents maybe 33% of the world market capitalization, about the same by market turnover, maybe 38% of the world GDP. You pick your denominator. You're going to see here, ladies and gentlemen, that almost 80% of our publications in finance focus on the US, notwithstanding the fact that the US is a considerably smaller fraction in terms of economic importance of the world, your measure. So my question was a very simple one. What fraction of published papers, empirical papers specifically, look at non-US markets? And is it commensurate with their economic importance? Well, I've already told you the answer. I collected data on 5,000 plus published papers in the top 4 journals. I'll tell you what they are. And then 9,200, that's since 1990. And then 9,200 papers published in the top 14 journals in finance since 2000. I tracked every single one of them through my army of research assistants, and we identified among the empirical ones which of them focus on the US, and which of them focus on, to some extent, non-US markets. And I tried to track it. It turns out the answer, as I mentioned to you, is 23%. Only 23% focus on non-US markets. If you only look at the top 4 journals, which are represented here, is 16%. So that's 84% of the papers focus on, as empirical papers, are looking at CRISP and CompuStat and focusing on the US markets. I'm not wagging my finger at you. I'm not wagging my finger at this group, but I'm pointing out facts. And this, of course, is well below this. Now, another interesting part of the paper, I'll show you some data on this as well, is I look at something called the foreign bias. Another phenomenon that people study in portfolio holdings is among the let's say US, non-domestic fraction of investment dollars that you deploy globally, what fraction of that do you deploy into this country versus that country? Do you overweight Indonesia? Do you underweight Sweden? Do you, relative to its respective market capitalization among non-US? Well, I look at that, the foreign bias in published research in finance as well. What I do is I also, the third part of the paper, I try to explain it. I try to explain it by looking at things that we think should matter, like, for example, I don't know, supply. What fraction of our professions, new PhDs that are being hatched, come from PhD programs outside of the United States? The higher that fraction, perhaps the greater the likelihood that people are doing research on non-US topics. What fraction of the population come from, these are the kinds of things that I look at as supply factors. I look at other demand factors, like from the home bias literature itself, to see if that explains. Basically, my effort is futile. I have horrible explanatory power using any sensible and rational things. And so I've got a few minutes left.
Data availability?
Data availability. So I think that's a bogus reason for us not to do research on non-US capital markets. Thank you for asking. I'm sure you're glad you did. These days, I mean, we're being sponsored by Capital IQ and Words. They are fantastic data sources available through Words at your respective schools and through Capital IQ on non-US companies. Capital IQ is through S&P, has global CompuStat Global Vantage. Many of you guys might have used it. There's plenty of data out there. That is no longer an excuse for not studying non-US markets, I think. Anyways, here's the data sources, this EBSCO search. We went through actual papers, but we use this as with full text capabilities. We went through and tracked which countries. I'm sure we made mistakes. Claire, go ahead.
The question, so you look at the ratios and there's a study done outside the US, just wondering what's the ratio in econ top journals? And then how do you explain the difference?
Good, thank you for asking me. I've had a number of I'm cross-appointed at econ, and when I've talked about this with my econ colleagues at Cornell, they tell me, oh, econ is way better. It's the finance guys that are arcane and left in the hinterlands here. The econ guys have figured this out. So I had an undergraduate student do a thesis looking at the econ journals. And the answer is they are much more progressive than we are. But I don't have his results on that, just so you know. Yeah.
Is it possible, like, for some interesting questions, it's tougher to answer with the international data because you're mixing a lot of complicated, a lot of different factors.
Yeah, you're absolutely right. My colleagues often tell me, oh no, the first question should be answered with US data, and then maybe the ones that we can't answer, the complement of it should be answered with non-US data. And I sit there going, well, wait a minute. If I'm talking to my hedge fund manager who's deploying 60% of his money overseas, and he's looking at that as the rationale for why there isn't enough research supporting his decision-making going abroad, it's kind of a weird way to rationalize things to me. Now I'm really wagging my finger. Let me show you some data here. These are my top 4 journals. Those are the 16. They're all familiar. We've got the co-editor of the Journal of Financial Intermediation chairing us here. So how big is the bias? Well, there you go, guys. So the red bar is the number of non-US papers by year. You can see it is going up. Wow. Almost, this is on the right-hand side scale here. So we're talking about maybe 60, 70 papers a year in the top 16 journals. And that represents approximately 15%. I'm sorry, this is 20 years, so this is the top 4 journals only. So we're talking about 60, 70. We reached a peak of almost 76 papers. What is that? 2008 in non-US markets. The fraction has sort of stagnated. It grew. Look at this. I don't know if you want to extrapolate, but it's sort of flattened out for the last 10 years. When you actually deflate it by the relative market capitalization of the US versus non-US, you can see that there was clearly progress being had through the 90s. And then when it stagnated and the US became a smaller fraction of the pie by market capitalization over the course of the last decade, you can see that the magnitude of the bias, this is the bias, right? It's the fraction being published on non-US markets minus the fraction of the world market cap that is non-US. And you can see we've started to get away from it. So things are getting worse. Progress had, things getting worse. The red bar is the top 14, so it's not just the top 4 journals. What about the foreign bias? Which countries do you think are overweighted? Among the relative fraction, so I'll take the US off the table, you guys can contribute. Of the US, take the non-US research. What fraction, the fraction of that by market capitalization that is in a given country like Indonesia, Turkey, Russia, Brazil, and look at the fraction of research that's focusing or has a touch to those countries. Which countries do you think are relatively overweighted in our literature? And which ones are underweighted?
Norway.
Hong Kong, Korea, over or under?
Over.
Over?
Norway.
Norway, over or under?
Over.
Over?
Japan over.
Over?
India. Over.
Over? India over? I'm sorry, I accept your answer because every answer is good, but let me show you the numbers here. So Japan, with the top last 20 years, Japan represents 60 count, which is about 19% of the pie in the top 4 journals. UK, Canada, I guess not surprisingly, Germany, Korea, Hong Kong, nowhere. And then this is the fraction of the top 14. And here it is graphically. This is just the raw fractions. Now I calibrate it against the market capitalization. And the single largest overweight, ladies and gentlemen, in the last 20 years, is my homeland, Canada. Look at that. Second, China is a huge overweight. Relative to the market capitalization of China, China is a huge overweight in the top 14 journals. Sweden, a huge overweight. How many papers on Sweden? Which countries are most notably absent from our literature? Switzerland. Almost no papers published on Switzerland, notwithstanding the economic importance of that capital market in the global financial system. The Netherlands, Maritime, underweight. Do you believe it? You don't believe it. I tried to, as I mentioned, I'm going to stop here. I tried to look for different explanations. Like I look at the fraction of published authors in the top 4 journals that are in non-US universities. Could that be representative set of referees? If referees are not sensitive to non-US markets, maybe that's the reason why we aren't seeing more papers published. So that's terrible. It doesn't work at all. I looked at the fraction of new PhDs that are coming. Like this 9%, it should be seeing more, that should help spur on maybe some research on non-US markets. Well, historically, it's terrible. It doesn't have any explanatory power.
And I just wanted to mention that most of the Dutch market cap is listed outside the US. Cornell is cross-listed,
That's
London,
right.
New
That's
York.
right. You're absolutely right.
So in that sense,
right.
it is.
But that doesn't mean it's not interesting to study, right?
That language is an important thing because China now we have a lot of Chinese students.
I told you it's no good, Robbie. It's no good as an explanatory factor for anything.
No, language is not.
Well, I mean, the fact that we've got more non-US PhD students coming into the marketplace is not helping. It's not helping. And your stories about PhDs. Anyways, There's a warning here, ladies and gentlemen, implicit in what I say. Part of my reason for doing this is also to nudge these people. These are influential decision makers in what gets published in our profession. And part of my rationale here is to mention to them this interesting phenomenon that we face, because they have some control. But you guys have some control over your own portfolios. And as you think about what you might work on, what you'd like to work on, maybe you've already fallen into this situation as you talk to your advisors. Should I do research on on Chinese capital markets? And the answer is, sure. If that's where your heart is, do it by all means. But please understand, the unconditional odds that the top journals will publish a paper on Chinese capital markets is, notwithstanding that wonderful paper by Wei Zhang and Jaylin Yu, it's really hard. So you might want to think about that as you plan your career for the next 5-6 years. Thanks.